I recently published a video about the option wheel strategy. And in that video, I explained what the option wheel strategy is, and then I took a deep dive and explained each of the steps and processes involved with the wheel strategy. I'll include a link to the video in the description below if you haven't had a chance to see it. And now in this video, I'll be showing you how I use the wheel strategy to generate an income of over $500, and I still have the shares that I can resell and make even more profit. If you're a frequent viewer of my channel, you may have seen a video that I published about how I use the wheel strategy for my simple option trading. In that video, I explained what it is, how it works, how to generate an income using it, plus I also answer some of the most frequently asked questions about the wheel strategy. And then as a follow-up, I published a video demonstrating my use of the wheel strategy and show how I was able to make a profit of $2,237. If you have any interest in watching these videos, I'll include a link in the description below. Okay, now it's time for me to get started on the wheel strategy, and I'm going to start with step number 1, and that's selling a cash secured put. I created a simple worksheet so we can track my progress through the wheel strategy. We can log each of the transactions with the variations in my account balances, my portfolio holdings, and so on. So I started this wheel strategy on February 22nd, 2021, and my starting balance in my account was $6,000. I didn't hold any shares in my portfolio, so I was ready to get started with the cash secure put. So I opened up my account history. Now let's take a look at the transaction where I sold my first cash secure put. Here it is here. Let's open it up and take a look at the details underneath. So for this transaction, I'm selling a cash secure put with a $60 strike price and an expiration date of February 26th of 2021. So I submitted this order on February 22nd, 2021, and you could see it was filled in the morning that same day at 6:38 a.m. Pacific time. Now, for selling this cash secure put option contract, I received $5.60 per share in premium. And so that meant that when this option contract got filled, I received $560 as a credit deposited immediately into my trading account. So I added this to the transaction log. Let's take a look. So on February 22nd, 2021, for stock symbol RIOT, I ended up selling a cash secure put option contract that had an expiration date of February 26, 2021, which made the length of this contract 4 days. Now, I had picked the $60 strike price and I was selling one contract. And for that, I would receive $5.60 per share as premium. So my total premium payment for that one contract is $560. So now my account balance changed, right? So I have $6,000 that's now reserved as collateral in case the shares get assigned to me. And the $560 we see shows up in my account immediately when this contract was filled. Now I still don't own any shares because the cash secure put is still in play, but if the shares do get assigned to me, they'll show up here. Next, let's jump over to a daily chart and look at the history of what happened on February 26th with stock symbol RIOT. By checking the chart, we see that the share price closed at $43.74. And since the market price was below my strike price, I ended up getting assigned the shares and using the money in my collateral to pay for them. Which now brings me to step number 2 of the wheel strategy. I will be assigned the shares, and that's because the market price finished below my strike price. Now let's add this event to my transaction log. So on the expiration date, February 26, 2021, my cash secure put option contract for stock symbol RIOT was exercised. And so this meant that I was going to be assigned the shares. Now recall that the strike price was $60, so that meant the money reserved in my collateral was going to be used to purchase these shares. And so at the end of the transaction, here's what I ended up with. So my account balance was $560. The cash reserved for collateral is gone now because it was used to purchase the shares. And I now own 100 shares of stock symbol RIOT. None of the shares are reserved for collateral. So what that means is not only do I own 100 shares, but I can use these 100 shares. They're available for me to use if I want to sell them or trade them or use them for a covered call. And if you notice, my cash basis is $54.40. I get that number because I paid $60 per share, but recall that I received $5.60 in premium per share. So the net effect is my cash basis is $54.40 per share. Now that I have ownership of the shares, it's time for me to move on to step number 3 of the wheel strategy, and that's selling a covered call. So going over to my transaction history, we can now take a look and open up the actual detailed record that shows the event where I sold a covered call for the stock symbol RIOT. So that transaction is here. Let's go ahead and open it up and see the details underneath. So for this transaction, I'm selling a covered call with the $58 strike price and an expiration date of April 1st of 2021. So you can see I submitted this option contract on April 1st, and it was filled that morning at 6:38 a.m. Pacific time. Now for selling this covered call option contract, I received 41 cents per share, and when the option contract got filled, a credit of $41 was deposited immediately into my trading account. Now let's head over to my transaction log and create a new record for this event. So on April 1st of 2021 for stock symbol RIOT, I sold a covered call option contract with an expiration date of 4/1 of 2021. So I sold this option contract on the expiration day. I picked a strike price of $58, and it's just one contract. And for selling this option contract, I received 41 cents per share. And when the contract got filled, I received $41 as a premium payment. That brought my account balance to a total of $601. Now you can see I still own the 100 shares, but now they're being reserved as collateral. And that's in case this option contract gets exercised and these shares may get assigned to the buyer, in which case they're no longer available for me to use. And the last thing to note is that my cost basis now goes down to $53.99. And that's because I received $41 as the premium payment. So it gets applied to my cost basis and reduces it down. Now let's head over to a daily chart to find out what happened on April 1st with stock symbol RIOT. Just as a quick reminder, my strike price was $58 for this covered call. And on April 1st of 2021, stock symbol RIOT closed at $52.03 per share, which means this covered call option contract expired worthless. So now let's head over to my transaction log and create a new entry for this event. So on the expiration date, April 1st of 2021, for stock symbol RIOT, my covered call option contract that I had sold expired worthless, and that's because I picked a strike price of $58, but the closing price was well below that. So that means that this option contract expired worthless. My account balance stays the same, $601. I still own the 100 shares. However, take notice that my shares are no longer reserved as collateral, and they're actually now available for me to use for another transaction. So with the option contract expiring worthless, what do I do now? Well, it turns out I repeat step number 3 and I sell another covered call. If you like the information I've provided in this video, do me a huge favor and smash the like button. So I've opened up my transaction history so we can see this next transaction where I sold a covered call. Here it is here. Let's open it up and take a look at the details. So for this covered call, I'm using the same shares that I sold previously. So I'm selling a covered call with a strike price of $53.50 and an expiration date of April 9th of 2021. So I submitted this order on April 8th of 2021, and it was filled later that morning at 7:40 a.m. Pacific time. Now for selling this covered call option contract, I received $1.05 per share. And when this covered call option contract got filled, that meant that I received $105 as a credit immediately deposited into my trading account. So now let's update the transaction log with this latest event. On April 8th, 2021, for stock symbol RIOT, I sold a covered call option contract. It had an expiration date of April 9th of 2021. So this option contract had a 1-day duration. I picked a strike price of $53.50, and I was selling one contract. And for this, I received $1.05 per share. That meant that when this option contract got filled, I would receive $105 in premium. So my new account balance is $706, and I still own the shares. However, please take note that these shares are now reserved as collateral, and as a result, they're no longer available for me to trade. And lastly, because I did receive the $1.05 as premium, my cost basis now shifts lower to $52.94 per share. Now let's jump over to a daily chart to see what happened with this transaction. And keep in mind, my strike price was set at $53.50. So if we focus on April 9th of 2021, we can see that shares of RIOT closed at $49.63, which is way below my strike price of $53.50, which meant that this option contract expired worthless. Now let's update the transaction history with this latest event. So on April 9th, the date of expiration for stock symbol RIOT and my covered call option contract, it actually expired worthless. And that's because I had a strike price of $53.50 and the market price finished way below that. As a result, my account balance stays the same, $706. I still own the 100 shares, but notice that the shares are no longer reserved as collateral and they're made available for me to use. So now with this option contract expiring worthless, what am I going to do next? Well, I'm going to repeat step number 3 again, selling another covered call using those same exact shares. Let's head back into my account history and check out the transaction where I sold this next covered call. It's right here. Let's go ahead and open up so we can check out the details. Here I am selling covered call with a $62 strike price and an expiration date of April 16th of 2021. Now I submitted this order on April 13th of 2021 and it was filled that morning at 11:08 a.m. Pacific time. Now for selling this covered call option contract, I received $1.80 per share as premium. And when the option contract got filled, I received a credit of $180 deposited immediately into my trading account. I can now add the selling of this covered call into my transaction log. So on April 13th of 2021, for stock symbol RIOT, I sold a covered call option contract. It had an expiration date of April 16th of 2021. That made the length of this contract 3 days. Now I had picked a strike price of $62 and I was selling one option contract, and for this I was paid $1.80 in premium. So when this option contract got filled, I received $180 as my premium payment. And as a result, my new account balance is $886. Now, by selling the covered call, I still own the shares. However, you notice that the shares are now reserved and not available for me to use for any other purpose. And as a result of selling this covered call and receiving the premium, my new cost base is now $51.14. Now let's jump forward to the expiration date, April 16th of 2021, to find out what happened with this covered call that I sold. Just as a reminder, my strike price for my option contract is set at $62 per share. At the end of the trading day on April 16th of 2021, the share price for stock symbol RIOT closed at $44.64 per share. So the market price finished way below my strike price, which means this option contract expired worthless. Now let's update this transaction log with the results from this last event. So on the day of expiration, April 16th of 2021, for stock symbol RIOT, the covered call option contract that I sold expired worthless, and that's because the market price finished way below my strike price, which was $62. So the end result is my account balance stays the same. I still have $886. I still own the shares, 100 shares, but take notice that the shares are no longer reserved as collateral. In fact, the shares are available for me to use in another transaction. So if I wanted to sell them or use them in another covered call, I could do that as well. Since this option contract expired worthless, what do you think I'm going to do next? If you guessed I'm going to sell a covered call using these same exact shares again, then you're exactly right. But don't worry, I'm not going to run you through another example. I think you get the point and the mechanics of how it works. But I wanted to make a point and demonstrate it through multiple examples, how I could keep reselling the same shares that I own over and over again with back-to-back covered calls, and all the while collecting more and more premium with each iteration. Eventually, I'll get to a point where I'm selling a covered call and the option contract will actually get exercised and my shares will get sold. But I'll save that for another video. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.